Paying no tax seems awesome until you want to borrow money for that awesome house. In our job as business accountants, we see it quite frequently where somebody has a really successful business but can't seem to borrow money on a mortgage. And quite often it's because they haven't got the information they need on paper to be able to prove that they have this kind of income. As accountants, what we see when business owners go for a mortgage is quite often we're asked to sign certain accountant certificates and provide certain documents. And the documents we're normally asked to provide are what's known as an SA 302. It's like the front page of a tax return calculation. It shows all your income build up. And then we also have to provide these things called tax year overviews, which show that you actually paid the tax. And sometimes for a limited company owner, we'll be asked also to provide accounts. Now, there will be mortgage brokers screaming at the camera now saying, wait, there are other ways to do it, and there absolutely are. But in general terms, 90% plus of the cases we see ask for those documents. And where business owners fall down is sometimes they just don't have the history. So for example, we'll see a client, maybe they've exited their very successful job, and then for whatever reason, they just decided not to take money from their limited company. So in that tax year, they've not got any earnings on paper. Now, for one of our clients, we would have talked to them about this, but quite frequently we take on new clients and you look at their tax return from last year and there's nothing on there. Now, forgetting the wasted tax allowances that are there, when it comes to borrowing money, they haven't got any provable income. And for some lenders, that's a problem. It's equally as bad a problem for those people that just pay no tax because they're being naughty, or those that arrange their affairs in such a way to not have any taxable income that just didn't think about the future. So if you do want that house, start thinking about it early. As we said often, it's a good idea to maximize certain allowances anyway and have some taxable income. But regardless of that, if your house is on your wish list and you want that to be one of your goals, you're going to need to start building up a solid income record and solid financials. And it probably goes without saying, but if you're evading tax, you're clearly not going to have the earnings on paper that you need to be able to get some of these mortgages. So if your long-term goal is to have the big house, then you're going to need to sort your affairs out and do it properly.